Lambo's been quick on the draw lately. Welcome everyone. How we doing? Ooh. Yeah, market was an honor one today. Yeah, market was market couldn't quite make up its mind. But it's nice finally seeing a little pullback. Love to see this. We'll be talking about some levels to watch, indirectly tonight, but you know, this sort of parabolic move really needs to always needs a little bit of a retrace. You don't just flip bearish at first spot. I know that both me and Talia and a lot of people have been, saying quit piling into them longs. And today definitely made the long chasers hurting pretty bad. But I'd like to see, I mean, I think we're there probably in the after hours already, but I gotta believe we're somewhere right around there. Yeah, it's probably about where we want to see it bounce. Otherwise, we probably got a little more down in us. Why not? It's the most important thing we can do as traders is just not care what way the market goes and only trade it. Yep, exactly. And yeah, this is just a weird one. And people, I even tried to talk about it last week in my class. We knew that the Tesla long chasers were going to get blown out. And so, I mean, don't get me wrong, nobody expected, a $50 drop on it or whatever. There's no reason to expect that, but we knew that was coming. And then the other one that we knew had a clap coming was that crypto move. I mean, for the same don't be bearish on it, nothing like that, but for the same reason of like, you don't stocks don't rip $150 without a pullback eventually. And so this was just, this move was coming. Of course, it was one you didn't want to predict, but uh it ended up paying if you were on the right side of it. Welcome everybody. How we doing? Things did get pretty parabolic though. Such a long consolidation to such just an epic breakout. Wow. Tesla's was the most impressive though. This was something we watched in my classes for years now, was this downtrend line on Tesla. And then finally here, a couple of months ago, we said, well, we're finally trying to crack that trend. Let's keep our eyes on that. I know Shark was on it. A bunch of us were saying, you stay long on Tesla over 220. Nobody expected the 200 to 360 rip though. And then now back down to 311. That's just insanity. Welcome, welcome everyone. We'll just give it a few more minutes. How's everybody doing? We have a good day. No, it was a tricky one. I know the little sell-off. I mean, God, the sell-off when Powell wasn't even talking was cracking me up. Like this big old knife was not even Powell. That was wild. It was a funny one to me. I expected a bounce. Got a small, I mean, I did actually think I caught this small bounce, and I tried to catch this bounce here, which it didn't bounce. I just gotta do a couple more things. Archon's on vacation, so no real class announcement today, so it might be a small one tonight, but that's awesome. Yeah, I think a lot of people did. This bounce was nice. I know that I hit this one. I think a couple other people hit this one on that double bottom. That was a good one. But then tried this bounce, and then really shouldn't even tried this bounce. Like, of course it's always got to be hindsight, but as you start looking back, there just wasn't buyers to be trying to catch that bounce, and Apple was the only thing bouncing, things like that. It was just kind of a one that didn't work out in the end. Okay, one more second. Yeah, this is what me and 1K, I think we hit this one. I don't actually even remember which one of these we hit. I think it was this one. Um, one of them though, but yeah, it was nice. It was a ripper. I mean, those things went pretty insane on that, on just a real, you gotta love candles like this, real quick bounce. Then of course, I mean, we had so much indecision going on in the market today that, I mean, I was liking buying the dips and catching the bounces more than shorting the rips, just because, I mean, if you were on the wrong side of it, you got roasted, and so it was a little bit, it was just a weird one. I was mostly trading other things outside of SPY and QQQ today myself. Clandestine, yeah, you hit a ripper. You got a sick one on some spy calls, if I remember. I think maybe you caught this one. I don't remember which one it was, but you caught a sick one. Okay, well, welcome everybody. Happy to have you here, Dirty River. Tonight we're gonna be starting my trading series. I always call it my beginner series, but as I said, in my tab or in the classes tab, I mean, that's not really the best description for it, because this is how a lot of people trade. This is how I trade. So it's really for everybody, beginners all the way to advanced. But I just really like to try to get, a nice, good groundwork, show people what I look for, show people everything I watch throughout the day. So it's gonna be many classes. I have kind of the tentative schedule typed out on it, but I think it's 8, 10 classes, something like that. There's a Q&A thrown in there, obviously, but we're going to just be covering everything that I watch when I trade, how I trade. It's something that it takes, the most important thing you can do as a trader is just keep trading and keep watching the market. And so, that's how these classes are going to be. We're going to kind of try to go, we're going to talk about really what I look for on many specific things. We're going to talk about support and resistance. Obviously, that's where we're going to start tonight. That's where everybody should be focused on. You can use all your fancy things that try to tell you where the market is going to go or your different indicators. And in my experience, they just don't work, especially in very volatile markets. A lot of those predicting things just fall short. And the best thing we can do as traders is trade support and resistance. We put the lines on the chart and we trade between those lines. We want to trade from one line to the next line. And that is what support and resistance is. Flips calls it trading level to level. That's all that is. It's support and resistance. It's worked in the market for, I mean, who knows at this point, 100 years, people have been using some form of it. So, it works and it will continue to work. So that's where we're starting tonight. And then over the next weeks, we're going to cover, the EMAs and SMA combos I do. We're going to do opening range. We're going to do contract selection, how to trade in ranges, how to trade in trends. Price action, trading psychology, let's see, Q&As, and long time frame analysis for short time frame trades, which we start here, but after we do, we're going to start support and resistance. Next week we'll be doing EMAs and SMAs, and then we'll really get into that long time frame analysis. Obviously, when we're talking support and resistance, as you guys will learn a little bit more tonight, and a lot of you probably already know, I do basically all of my support and resistance charting on longer time frames. We're at an awesome place in the market where we're at all-time highs, but we are pulling back a little bit off of them now. And so we can actually discuss, this is one of those times where I can't solely depend on daily time frame levels because we just have so little data and so little information up here. We've spent all of 5 days total, 6 days total ever trading at this price. So there's not a ton of info here. So this is actually a time where I will step back a little bit and go to those, 4-hour time frames, maybe even down to the 1-hour time frame when we're, really pushed up towards these all-time highs and we got very little info. That's when the 1 hour can start to be really, really powerful. But otherwise, I do most of my charting on the hourly time frames. And so, or on the daily time frames rather. And so with that, unless anybody's got any questions, we will get started. Okay, good. No questions. So, support and resistance. What is it? Why does it work? How can we chart it? There's something that I always say in trading. I even mentioned it in my tab. There's a million different ways to do things, a bunch of right ways and a bunch of wrong ways. So we're going to be covering tonight support, traditional, classic bread and butter trading support and resistance tonight. Sometimes you can find support and resistance, we're just going to talk about it a little bit. You can find it using other things. And whether people realize it or not, when they're using these different indicators, one of them, for example, is fibs, Fibonacci extensions or retracements. When you're using those, yes, they're a fib level, but all it is just a different form of support and resistance, support or resistance. And so no matter what you're doing, basically everything in the market is some form of support and resistance. We use EMAs as support or resistance. We use VWAP. We use all of these different things, and all they are just different forms of support and resistance. So tonight, we're going to be talking about just classic levels off the chart based on what the chart tells us. We know where we want to put those levels, and I'm going to show all of you what I like to look for. As I said with SPY, we're going to go back and we're going to chart. We're going to be charting levels all the way back to 500 or so tonight. Not because I think we're going to 500, but so we can really, really see what I look for. Again, if anybody has any questions, I've gradually been doing better and better following the chat. If anybody has any questions while I'm going, please make sure you ask them, because I frequently get a little bit behind on the chat, and if I get behind, then I'm not going to know where your question came from. So, please feel free to ask those questions if you have them. You aren't going to be interrupting or anything. If you have a question, there's a very good chance somebody else has that question. And so we're going to start with SPY, chart some levels on SPY, and then we're going to go look for something else. We're actually going to chart something that, people will probably laugh that it's the one that I pick, but it's a really nice example. The next one we're going to go over is Tesla, just because it's something that's not trading near all-time highs. We have a lot of levels, and we can really see a great example of how and why daily levels are the most important, because Tesla's trading at prices it hasn't traded in 2 or 3 years, and so those prices from 2 or 3 years ago are still the support and resistance. So Tesla just happens to be one that's a very nice example of how support and resistance works, how those daily levels last forever. So again, we're going to start with SPY, and as I said, I always start on the daily time frame. I've started to realize, I've been asked a lot by other people, why don't I use the weekly? And I do, and I like the weekly, but we're gonna end up, when we're charting the daily time frames, we're likely going to end up with most of the same levels that the weekly would provide us. And you got at least how I chart support and resistance. And so all of you will understand what I mean by that as we just go through this a little bit more. And so again, we're starting with SPY here on the daily time frame. And then I'm just going, like blank chart, no indicators. Obviously, we're doing support and resistance tonight. And so I'm going to show you the main things that I look for and the levels that I will care the most about, and, how we get those on the chart and the things that I look for. And so the number one thing that I look for is what I describe as dramatic high and lows. And when I'm saying dramatic high and lows, what I mean by that is somewhere where, say, the market is pushed up and then it's really rejected off of there. I care what that level is. On the flip side of it, I want to say, hey, the market really sold off and then it took a great big bounce off of there. So when I'm saying, dramatic highs and lows, those are the things I'm looking for. They're basically, some people might refer to them as swing high and lows. There's a bunch of different names for them. I just call them dramatic high and lows because it's pretty obvious what you want to look for. And we don't want to mark every little high, like, yes, we pushed up and we pulled back and we pushed up and we pulled back, but this is just trending movement. We want to mark the highs where reversals came from, both up and down. And so when I do that, I always start on the left of the chart and I just work my way forward. Or, if we're downtrending, you're still working way left on the chart to figure out where those other levels are. And so when we have something like this, I start looking at the chart. I start looking for dramatic highs and lows, and then I start looking for places that I want to put the levels. And something that I do, and I'm not going to say this is the 100% right way to do it. This is just how I do it. 99% of the time, I'm going to mark a wick. I'm not going to mark a level on a body unless the body is the high or the low. But I am always going to mark a wick. And, when I'm saying wick, something like this. I mean, or even a dramatic wick here. This is a $8 wick, $10 wick. I want to mark those. And why do I mark the wicks? I mark the wicks because that is where the other side gave up. And what I mean by that is, we'll zoom in here. And so we have, we had this nice little bit of consolidation going on. To me, this is the most important level around right there. 524.66, it's the highs. We also see we have another little one right here. So for me, I always, if I can, like to look for a little something like this. And why do I look for that? Because now we've actually encompassed a few highs and we get a look at this and say, okay, this is sort of a range. Because, in support and resistance, you will, as you get better and better at charting them, and especially if you really focus on these dramatic highs and lows, you can frequently get within, a few cents, 10, 20 cents of where that, at the most of where that bounce might come from. Sometimes you're right on the money, not always. But if I can find something like this, I'm going to view it as very strong. So if we push back up into it, I'm not going to be long until we break over it and retest it. And if we push up into it and looking like we're going to fail, I'll actually feel safe being short here. And so I mark the wicks because this is where they lost. This is the last time the Bulls were in control. And then we ultimately ended up selling way, way down. And so for me, thanks, Lambos. And so for me, then I start looking for the downside. And right here, we have the wick again. And again, why do I mark this bottom wick? Because this is where the reversal came from. I'm not trying to say, 493.65 was this extremely crucial level and we all should have had it on the charts. We chart these after they happen, but we know that right here was the last time that the Bears were in control. So we always want to be looking for those. And that is how I chart support and resistance. And we can even see here, we obviously had, we pushed up and we pulled back, double topped right off of here and pulled back $15, probably worth charting. But we want the dramatic high. We want the dramatic low. I'll even go back up here. To me, this 533, we ultimately pulled back, we pulled back, $15 right there. I want this high. I want this low. This was the last time where the Bears were in control until we finally pushed up, set somewhat of a dramatic high, and then pulled back again. And I'll always mark when we have an up, I always want to mark a down on the other side. And so that's what I do. Again, we watched this ended up being consolidation. Ultimately, we got the breakout retest, pushed up here to a new dramatic high. We want that on the chart. Then we come all the way down to here and we want to mark this dramatic low on the chart. This is where we obviously pushed up and then this is the last time the Bulls were in control until we ultimately got this, break all the way back down. Another thing, and again, I'm just going through this and showing you exactly how I would chart these levels. Another thing that I'm always going to take note of is something like this. This was an attempted breakout. Knowing me, because I'm always bullish, I probably was watching some sort of trend like this and bought this breakout and got blown out, I guess this was the carry trade unwind, so maybe not. But mark these dramatic highs. We can even see, this one comes back into play instantly. I mean, obviously this buy up, it just rides our levels, opens at our levels, breaks and retests over and over. These are all levels from the left, so we already had those. Up here, this is another great example of, I said I like to, if I can find a little zone, that's what I want to find. And so I'm going to mark something like this because when we pushed back up to here, we knew we had our level up here. Then this ultimately ended up being the last time the Bulls were in control until a big sell-off. And then again, we want to mark this wick. Here's our big push up. Here's our big push down. We've now identified a very strong zone here. We can see we spent a lot of time in between there. Obviously, this dip buy ultimately paid really nice. I'm not going to mark that other wick. Personally, you could. It's 30 cents away. You could mark that other wick. I personally wouldn't, just because we have that level right there. So I'm happy with that. And then ultimately, we break above this. We come back and retest what we know is our strong zone, get another bounce up. And again, dramatic high, 574, pull back $10 in a few days, right back down to our zone, dip buy. Break above our level, retest our level. Great place to be looking long. And then once again, look for our dramatic high up here. And so we put our dramatic high up here and we want to mark the pullback. Well, we basically already have the pullback mark, so we don't need to mark anything here. Not much of a push up here, kind of just consolidation, And then obviously the next one that we want to have marked right here. So this is how I chart levels. And if we zoom out, we can see, obviously we can get these levels and then we trade them on the right. We get these levels and then we trade them again on the right. So when we're trading all-time highs, this is how I trade. Then now we get to see a more, now we get to see what's going on right now. We've broken above all-time highs. So obviously you want to put your all-time high level on there. But as I was discussing at the beginning, oh, we got Norbin in the class. As I was discussing in the beginning of this class, we have very little data up here. So obviously one of the levels, or two of the levels we can have our eyes on are obviously going to be the top of this candle and the top of this candle, just because it's a gap. It's not a big gap, but it's a gap that we can have our eyes on. And because we have so little data up here, we need levels to trade around. And so this is where we will typically step down to a shorter time frame. And so what I always do, I always go to the 4 hour first, just because it gives you the after hours information, which a lot of people ignore. I personally don't think that's a very good idea, but it gives you the after hours information, which a daily candle doesn't give you. The reason that there's gaps on a daily chart is because it doesn't take the after hours movement into account. So I always basically just want to do the same thing. I want to look for points of consolidation that turned into breakouts. So really, we had this level, and I was, actually discussing this in my class, and then, or my class, here a couple weeks ago. And then obviously we have, right around here, this 595 level, big bounce point, ended up being a big bounce point, big bounce point. Today, when we couldn't hold above it, ultimately sold pretty strong below it. And so these are the levels that I will be trading. Then again, I look back here, and I'll look for things like this, where, this candle broke and gave us the big old push, ultimately pushed into resistance, pushed back above it. These are really the only levels that I have any concern with up here. So if we go to those shorter time frames, we can obviously, all these levels are from this side of the chart. So when we go to these shorter time frames, we can see our support and resistance levels will work time and time again. And all you do is trade between them. So what I like to do now, I want to see how we got Norman saying things. Any questions about what I did there? Again, it's pretty simple. Find your dramatic highs and lows, find your big old wicks, and on the daily time frame, mark those and trade those levels. That's, the best thing that we can do as traders. So does anybody have any questions there? I mean, it's like I said, it's relatively simple, and these levels work time and time again. And now we're going to go back in time, and we're going to watch these levels work, and we're going to see how these levels work on shorter time frames. As long as nobody's got any questions, we'll get into it. So kind of a tricky question, and it's not something we want to identify these levels first. So that's what we're really covering tonight. We aren't so much going to cover entries and exits or anything like that tonight, but how we trade these levels, how I trade these levels is I assume they will not break. We're going to get into that, as more and more of these classes go on, we're going to get into some of the statistics of trading and how I trade around these levels. But how you trade these levels is, if we've pushed up to it, you assume they aren't going to break, and you don't do this every single time a level is touched or anything like that. You want to see if we break above it. You want to see if we break back below it. You look for a break and retest. You short it with stops above it. Or if we pull down to your next level, you long it with stops below it. That's, of course, extremely simplified, but you assume that these levels are going to work. And if they don't work, then they likely aren't really worth being on your chart, especially. But okay, so with that, we're going to get longer time frame. We're going to go a long ways back, 180 days back. And, we were charting these all off of the daily time frame, going back all the way about to, I think we were trading, 400-500 in May. So, or 500 around May. Yep, May, April, there we go. So we have these levels on the chart, and obviously we're gonna let's see, we probably want to go at least a little bit forward. So how I trade intraday around these levels, and what are levels that I look for. So we can see here, something I always try to tell people is, you need to keep your price targets realistic. You know, I make fun of people all the time. Everybody makes fun of people. I saw it today on Spy. We were trading at 512, and somebody said that their price, or on QQQ, we were trading at 512, and somebody said their price target was 515. Well, there's a lot between there. So that's what we look at here. We come to these shorter time frames, and we can see we got a big level at 518, and we got a big level at 524. So when we don't have a ton of levels, you don't just say your next target is 524. That's not what you do. You have to trade intraday. But how you use these daily time frames and these daily levels, and as we go forward in more time and we get more and more levels, you'll see how you use these daily time frames is when we break above it, you are basically a dip buyer. You want to stay long as we are above the level until you start pushing up and up and up and up into the next level. You want to start to be cautious at these next levels because we assume these aren't going to break. So you want to start to be cautious as we get to those next levels. And then when we break above it, you dip buys with stop below there until we move and see. Sometimes we just consolidate for a long time, or until we push up close to these levels. That is where you want to look to be short with stops above. Well, that's only so helpful because we know, we need to have realistic price targets. So how do we manage a trade intraday? And I'm just picking, a really random day here. So we break above this level, and so we know we're in dip buy mode on it for the most part. That's what we're looking for, and we aren't talking so much trading. Now we're going to talk about when we don't have those big daily targets, and we're trading right around them. Obviously, if we break above this, we know it's support. Well, we can't just have our next target $7 above us, $6 above us. That's unrealistic. So we have to use, and this is going to be covered a lot more in the price action lecture, we have to use our intraday stuff. These are still support and resistance, but they aren't important enough for me to put them on my chart. So some things that I look for, and I'm going to mark them with circles as opposed to lines, just to show you that I use them as a target. Well, we've sold down. This was our previous double top. We're long down here with stops below this level. When we push back up here, here's our first target. Another support and resistance that you'll hear a lot of people talk about is pre-market high and low. So this is pre-market high right here. So that is obviously going to be a support or resistance level. It's not something I'm going to leave for the next day and the next day. It's an intraday level. So that's why frequently, myself included, people have scripts that just chart them instead. Another one, pre-market low, the lowest low from the pre-market. And here we can ultimately see that's where the market bounced. It worked great on this day, but I don't use it on the next day. So that's why these levels don't stick around, but the daily levels do. So we buy the pullback to, pre-market low, stops below our daily level. We look for our first move to here, and then we ultimately look for our next move to that pre-market high. So we're never pushing out more than like $1 price target. You can even have consolidations, always a great place to trim. We see we got a pullback there, but these are the main short-term levels I will look at. If we're trading outside of them, then, and we're already outside of it, then frequently what I will do is, go back and look at previous days, some previous highs. We had a 537 high here. Do I think that 537 is important enough to have on the chart? No, but here's our pre-market high. We bought the dip down to pre-market low in our daily level. And again, this isn't trading plan, just discussing support and resistance. This was our support. We took it up to our first resistance, we took it up to our second resistance, and we took it up to our final resistance here. That's how we use intraday levels. We don't care about them down the line. Maybe they work again, maybe they don't. Maybe that level does find a way, to stay on your chart. But we trade our big daily levels for bias and entries and ignore a lot of the noise in the middle. And that's how That's how I trade. That's how, frequently people ask me, "Oh, what do you think of SPY calls here?" And I might say, "No." And that doesn't mean I think it's not gonna go up, that's not and I always say, it's not that I disagree with you, it's that we aren't around a daily level, and I want my entries around daily levels. So again, we're going along, we have our daily levels, we break above them, we take entries, maybe it's a scalp, maybe it's a day trade. Well, if we pull back to it, we take an entry, and this one, I mean, we get blown out, we get stopped out there, obviously, I get stopped out there. We broke low a day, so I'm gonna stop out there. But doesn't matter. You take the stop out, and that's what the levels are there for. You never want to, in my opinion, you never want to base a stop loss on. Oh, we got Norvin sending charts. You never want to base a stop loss on percent because what if, what if you do buy the dip and maybe or maybe you buy this break above and you say, "Oh, my stop loss is 20%." Or maybe this one, "My stop loss is 20%." Well, you're going to get stopped out on a trade that you shouldn't have stopped out of because the candle closed, your level wasn't broken. I talk this in voice chat a lot. People always just say, "Oh, the level's broken." Well, no, it broke, but a candle hasn't closed. You have no confirmation. At one point, this candle, yeah, it broke below our level. It closed above us, and ultimately, you ended up making money on the trade. So, never want to do it based on a percent. You want to base your stops on these levels. Norvin sending charts. Can a share skip for pre-market high? Oh yeah, see, in Norvin, yeah, never base it on percent, in my opinion. Always base it on a level. And so again, we trade our daily levels. We get dips down to it, we buy those dips. When we get up to here, if it works, we start taking positions off. Then we look for breaks above with retests, and we look. I mean, that's a huge move up. That one's basically got to be ignored. But we just trade what the chart shows us. Obviously, market spends a lot of time consolidating, but we're staying above our levels. We know where we want to get long, and those are the trades we take. And we sit and we patiently wait for those trades to come to us. And that's what I always tell people, the best traders do nothing all day long. That's what makes you a really good trader is just being able to sit on your hands, waiting for your levels to get hit. And, oh, we hit a level, we're rejecting below it. Yeah, short it, awesome. Short these, buy these breaks. That's all we can do as traders. That's what me and Flips try to teach all the time. You're breaking a level and retesting it, trade to your next level. We can't push up to it. Be short biased until we get down to this level, then you don't want to be short here. Maybe you can catch a couple bucks, but you do want to be short on the retest. Push up to here. You can theoretically swing short. I'm probably not. It's a bull market, so stay long. But these breaks and retests, easy. Take these trades, and you can see all these levels are from the daily time frame. All of them for in the past. As we get to these levels are from behind us. So we trade these levels. It's all we can do. If we're just consolidating and breaking above and below a level, maybe you don't want to be trading it if you don't like trading ranges. And then as we get up here where we have had some, long consolidations in the market, buy those dips to these levels. If we get breaks and retests, trade them. All we can do is trade them. People always wonder, how to Flips and I, or, any of us that trade SPY and QQQ a lot, when you see these just death days, and then they'll hear some of us be like, "Oh, I'm going to try SPY calls." Well, it's because it came to our level. So we trade our levels always. And as you can see, we're just scanning through this quickly. These are all daily time frames. These levels will work over and over and over again. If you have drawn them well, the market should track between them. Again, you don't want to enter at 550 and say we're going to 542. That's an unrealistic target. You have to trade some of those more minor things, your pre-market highs and lows, previous day highs and lows, all of that. But they will almost always track level to level if you're drawing them well. That's where a lot of people struggle is they're just putting levels all over the place. And I mean, of course, you don't always, but they're just putting levels, way too many levels. You can see here, if somebody looked at my daily chart, they'd be, "Oh, it's crowded." But they're ignoring the fact that there's 5 levels in a $22 range on SPY. That's not very many. And use them for your bias as you start to get to these hard to pass places, obviously start easing off the gas on longs until we get some pullbacks or confirmations on upside. This week has been, look at all that consolidation. That one was wild. This week has been, and look, we got a bunch more levels up there because we took them off the 4 hour, and we'll ultimately start deleting those. But this week has been tough for people because the long trade was good. And don't get me wrong, there's been some really awesome dip buy opportunities. The trend is down now. I mean, the trend is very, very short term, but the trend is down. So shorting bounces has been working as well. And now that we're starting to see these pullbacks, we can kind of again go back to our daily time frames, look at our levels, start to say, okay, we're getting to some points where I would expect to bounce. So now we can start to look long again, much less so on this day or even this day, this day, this day. Now we start to look long after the pullback. So that's support and resistance. We're gonna do one more chart real quick. Tesla. We're gonna do it fast. I'm going to show you how, again, everything that I do, we're going to do it fast. And then we're going to, hopefully, we should have, 5 to 10 minutes at the end of this. And we will look at some other charts, maybe some charts that all of you want to look at. But we just want to go back in time on something like Tesla that, it's been technically speaking range bound since 2020. Very large range, obviously, but it's a very technical trader. It's much more friendly to trade than this thing used to trade at $1,200 or $1,000 or whatever it was, even more than that at different times. And so, it's much more friendly to trade now. So we're just going to do the exact same thing we did, dramatic highs and lows. And let's be real, Tesla has some dramatic highs and it has some dramatic lows. You just want to go through and mark these. Anywhere that we had these big, huge pops, you want to be aware of these big pops that did not stick. And then again, on this downside, it'll start to look like a lot of levels, obviously 300, but you have to think we sold from 400 to 300 and popped from 300 to 400. This is actually pre-split, so it was actually like a multi-$100 move there. You want to be aware of that. This one, we've basically encompassed it right down here. This bounce took us from 233 and peaked out at 384. You want to be aware of that. Big old triple top rejection right here. Big old double bottom down here. You want to be aware of these levels, and all of these levels are coming from, this is 2022, 2021, 2020. These levels are coming from back there because, until just a couple of weeks ago, Tesla was still like in a bear market, it was not doing well. And so we'd keep doing that, keep working to the side. And then obviously we're going to mark these way down here. We don't necessarily think Tesla's going back to 102, obviously, but doesn't matter. You always want to mark the dramatic highs, dramatic lows. So we can see here, we had this marked from back here. This high was this high. This was that temporary 2021 high. Well, it absolutely clobbered us when we got back to there. When we broke below it here, clobbered us, tried to hold it, but anytime we got below there, we sold. When we bought up to here, we sold. Obviously didn't work so good here. Now we keep going. Dramatic highs. Anywhere you see dramatic highs, anywhere you see dramatic lows. So this is how you chart these names. And people want to know, okay, well, how do we trade? There, we got a big gap here. We start to look for big points of consolidation. They didn't want to give up 324 for 2 weeks. And when they finally did, clobbered on the back of earnings, it looks like. Clobbered it. Zoom in, look for some of these little sneaky things in here, old gaps. I will always mark, we sold $20 and then we gapped $20, back up. Take note of these things. And then as we start to work back into them, we start coming over to here. And I actually really like this gap right here. As we start coming over into here, we see all of our levels from the left still working over here, still working over here. As we start to push back up, levels still working over and over and over again. Obviously, that's a pretty nice little double bottom gap we had right there. We want to take note of that. and we just keep scrolling through the screen looking for anything that catches our eye, any, nice big this one, and we aren't saying 212 made it rip, but it went from 212 to 280. We probably want to know around that level. Keep on going, right? Any big wicks that we see, any dramatic lows we see, any nice, this is a $25 bounce. We'll take note of that. We'll take note of that high. Not saying we ever get back to these levels on Tesla. Maybe we do, maybe we don't. And we see levels still working, supports trying to work. When they break, they sell. Sell us down into a big zone, we bounce. There's a nice rejection there that we didn't have. This is how you chart everything. It doesn't matter what the stock is, none of that. These levels will work time and time again. You of course need to always be looking at that intraday price action, but we can even just see here, if we're going back in time, none of these levels were from recent. All of these levels worked. So we go all the way back to the, I'm imagining this is probably election day with that gap. Or maybe that one was election day. Who knows? No, yeah, this one was election day. That's the fifth, sixth, seventh zone. So look at our levels working. We consolidate between our levels. We finally break above our level. We push to our next level. We consolidate again. You're a dip buyer here up to these next levels. We break above it. Maybe you do try to short that 328. Hopefully you didn't swing. And again, level's still working. That's actually a pretty nice double bottom, but that some nice intraday price action right there for the bounce. Levels still working. Reclaim it, work to the next one. Reclaim it, work to the next one. Sometimes it's going to fail. This one failed. No big deal. You just keep trading the levels. Even here, dip down into these strong little zones. You can try to be that dip buyer there. You were rewarded if you sold fast. Again, dips down to them, breaks below them, you short, breaks above, you're long. Cut and dry, no questions asked. Breaks above it, and maybe it breaks above it and you long it and it closes below it, you stop out. No questions asked. You just keep doing it. Double bottoms or higher low double bottoms at your levels, you keep on doing it. Keep buying those dips, and then keep shorting those rips up to those next levels. Break belows with retests, you do it over and over. So you can see here, that's why I wanted to do Tesla. Excellent example. These are levels from 2022. They are still working right now. Obviously, you don't want to short 324 and expect it to go to 314. It did, but you want to trade the levels that are there, and then you want to watch the intraday price action to know how you should be trimming or anything like that. So let's see. That's it. And then again, now it's kind of question time. We can look at another chart. We can do another chart, whatever you all want. Let's see. We got Norvin. I have basically never looked at the 15-minute 200 EMA in my life, to be honest with you. So I don't especially have an opinion on that one, but it's probably a good thing for you to watch. Ninja, Nvidia, Starbucks cost. Yeah, we can talk those in a minute. Norvin want the Sky ETF. These bars on the bottom are Thinkorswim. This is actually these ones down here that you're talking about, Ninja, I'm assuming. These are just volume bars. This is an algo that my buddy made. I think Flips uses it, but this is an algo that my buddy made, for me a couple of years ago, a few years ago now. And then another buddy did a little more work on it. And so here we are. It's fine. If you want it, let me know. But yeah, it's Thinkorswim only. How are the levels created? So that's a sort of tricky question. And it's a weird thing in the market. Sometimes we need to ignore why. You know, the market just, it's an auction. So, and no matter what, there's buying and selling going on. It's not nearly as manipulated as people think. In fact, how people think it's manipulated, it's not. They aren't doing anything to affect us. This is just people trying to buy and sell at the same price. So, why was the level made at 228.44? Who knows? It worked. That's what we care about. We don't know why that is the point that buyers decided, okay, I don't want to buy Tesla anymore. All we know is that is where they decided. And that is all we can care about as traders. I have a couple trader friends that they're off the deep end on the market makers and the hedge funds trying to hurt us. And just plain and simple, they aren't. They don't care about us. But for whatever reason, the algos and the market makers right here decided we don't want to buy Tesla anymore. So for us, that's all we care about is the where did that happen. And so don't get too hung up in the why, just get hung up in the where. And who knows why this 138 low was set, and that's where they decided to start buying Tesla again. I don't, but I do care that if Tesla ever comes down to this 138.80 again, I'll probably try to play a bounce. That's all we can do as traders. Okay, so let's see. I had a couple of people ask. So Ninja, you asked for three things. I'm gonna send choose the one you want the most, and then we're gonna do it right away. Spot, nice. So Spotify, just coming off the back of I was actually just talking this one with a buddy. Just coming back off the back of some epic earnings, miles above all-time high. Miles above all-time high and miles above IPO price from whenever that was. Way back here, we are just printing on this thing. This is a difficult one because we have very little data. So obviously, this 387.91, that was the high we cared about. Now we're coming into kind of the same sort of trading. We can mark all these are still dramatic highs, even though it's just grinding up. We want these dramatic highs, we want these dramatic lows. We do the exact same thing. Well, now we get to this. And we aren't going to cover how to find these all-time high like levels up here in this lecture. We will get to it later. So what we have to do if we're trying to trade it up here is hit these shorter time frames and look for any sort of, where did we bounce? Where did this big ER candle stop? Where did the pullback ultimately end up being bought? And you can see very, very quickly the issue with these levels. We got $20 between them. So it's a little bit tricky to find levels on something like this. And so that's when you can kind of go to these 5 minutes, go to these 15 minutes, and look for just some of these intraday bounce spots, intraday rejection spots, and trade these levels. It's tricky. Again, obviously, mark your all-time high, mark your rejections here, mark your bounce there. And these are sort of the levels that I would be watching in this area. You can see I got a few off the daily, but for the most part, we have to look at this, more intraday price action and just look for those dramatic bounce points. And then if we continue to trade at these levels up here on Spotify, a bunch of these levels will end up getting deleted, and we will just go back to our daily time frame levels once we have more data up here. But when we have 2 days ever traded at these prices, you have to go to the shorter time frames. Apple. Yep, we can. Similar situation. As a similar situation as Tesla was in for years. So these are the levels that I trading on Apple myself. So Apple's this interesting one. Truly unbelievable. Truly unbelievable move for Apple. Apple is up the better part of 100% off lows. Unbelievable move on Apple. Well, we have been consolidating now at this point for almost 6 months. So that's how I'm trading it. Apple's making it cut and dry for us. We know we're again marking dramatic highs, marking any of these dramatic highs, we don't think it's going back down there, obviously. Anywhere we've taken big rejections and sold. And then Apple is one that I'm happy you asked about. So I'd put a line right around this 229.50. I would probably even do two of them. 229.30 all the way up to or 229.36 all the way up to about 230. And why? Because we've just rejected right here a lot. So it's not the spot where you want to be getting long into it. Then again, I'm going to kind of do it down here and look to encompass a lot of candles. And it's basically going to be about this 224.75. So I'm a dip buyer all the way through here if we sell down into it, and then I'll short it below it. And so this is what I see on Apple. This is what I've been trading on Apple, obviously, for basically the last 6 months. This is what I've been trading on it. And this is what I will continue to trade on it. Obviously, as we start pushing up these 230s, zero interest in being long until we're above them. If anything, I like a little bit of a short off of there because that's the best risk reward. We'll get into that later, but I don't be long into these, but I be long when we're selling down into these. That's how I do it. So this is what I trade on Apple. Obviously there's also some trends and things going on, but as far as support and resistance, this is what I've been trading day in and day out. Who traded the Disney? I mean, that thing was just it was just a wild one today. I mean, it had just the epic run up early, but ultimately started selling. It's a level respecter. I love trading Disney a lot. It was a hard one to trade. If you swung it, you're out at open. I mean, sure you miss out on a couple of bucks, but you just caught one of the bigger moves. Like, look at let's see. Just do this real quick. So look at this move on Disney. It is literally one of the biggest moves Disney has made, likely ever. I haven't read to see, but this is a top five move on Disney. If you get the $11 move on Disney, you take that, especially when it's an earnings move. You take that. Again, this last one back here, this one was $7 move on the open and then about 13 to the top. So these, at least I saw it. I remember this one, I believe, is the biggest move ever. If you were long on Disney, you just caught the second biggest upside move on Disney ever. So you take it off the table. No big deal. Let's see. So if there's a sport level broken, but it just keeps going down or up and doesn't bounce, well, so that's for me. I don't chase. So if I don't get an entry, I don't take an entry. If uh oh God, I mean we didn't really have any. Let's see, let me just go back a little bit and see if there's one that just exploded and did not even give me a chance. Okay, so this one, uh big breakout. I will not and never will buy calls right here. If we would have got the pullback to here, if this broke out, pulled back, and we would have got that pullback to here, I would have bought it. I will never buy calls here. It kept going, sure, but this is not a good entry. You don't want to do that kind of thing. If we get the breakdown, break below, a bit of consolidation, we're pushing up to here. I'll take a close enough retest if it's 10 or so cents. But when something goes like this and it just keeps going, I don't chase it because it can just as easily reverse and blow you out. My entries are based on my levels. I don't enter anywhere that's not close to one of my levels. So I just don't chase them. You have to ignore that kind of move. Ninja Nvidia, yes, you got it. How did I know that was going to be your one? So Nvidia, obviously the strongest of the chips, no questions asked. Extremely easy trader right now. We do the same thing that we've done. You always want to mark your dramatic highs. You always want to mark your dramatic lows. I'm just going to do these upper ones. There's no reason to talk about Nvidia at 90 right now. Obviously, big rejection point here. Well, we're trading at all-time highs. So what do? We look for the range that we are trading in. And to me, we had the breakout and then we've just consolidated here over and over and over again. So we really have two levels on NVIDIA that we care about right now. And it's that 146 and basically 150. You can call it 150, but 149. So these are the levels we care about. And we had these levels, just to show you from the daily time frame, they're basically these first two candles. I mean, this is really the one that I would focus on. Obviously, we can put this level down here as well. But we're basically trading this candle. So for the last 4 days, we knew our levels, 146 and 149. And so we go back 4 days. If we buy every break and retest of 146 and we short 149, it is free money. Any entry in the middle of those two levels, I do not like. That's just me personally. Could you make an argument for the nice consolidation here at that 148? Sure. But we can also see it can rip above it, it can dump below it, it can, reject, 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 and then get clobbered below it. So I don't want that. I want the place where we keep on bouncing and bouncing and bouncing and bouncing and bouncing, or reject, 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 reject. I want those levels. So for me, I dip by down here to 146 and I short as we get up here to 150, 149, 150. I haven't been. I don't trade Nvidia a lot. I don't love trading it. But those are the levels that I care about. So this has been a really great example of I've been asked a million times over the last few days, oh, Nvidia calls, 148 or Nvidia puts at 148. It's the middle of a range. So I don't trade there. But those are the only levels I care about. And then obviously, when you're trading intraday, that's when you start to care about some of these other levels. If you buy this dip, well, you probably want to be trimming at some of these previous lows. Like, look, we got rejections here. You want to be out, you want to be out of those trades. You don't want to be the person saying, oh, I'm going to see what happens and hold it for 3 days. You take your money and look for a new entry. Sky ETF, huh? Cloud computing ETF. Never even heard of it. Well, we're getting about to the dip by point. I mean, I wish you would give us these things before they're up a few 100%. Pretty tricky one though. But obviously we got very little info here. I mean, your dip by point is about that 118 zone, stops tight below it. And then really I would start looking to short this thing on the move back down to here. And then if we get down to 115, I would definitely try the dip buy on the top of that old gap myself. Full-time trader? Yeah. Yeah. Yep, Adrian, you got it. Yeah, I mean, you can. You can manage them all you want. Yeah, so that is the hardest thing, and that's something that I consider or something that I tell people just don't chase. And it's so hard, people can't, I mean, it was even, you know, people can't resist chasing the big candles. And so crypto has been that this week. People see these big pushes up and they've been trying to buy every dip on these, buying every dip on coin, and they're making money, but they're looking, they want this and they aren't accepting the fact that like that happened back here. You don't chase the move. And it's hard because if we go back a little bit, and this is where the big issue comes from. So we had a 4 day period where if you bought coin calls and you held, it literally did not matter the candle you bought. You were making money for 5 days. So people think it's going to work on day 6 and it works. Then they think it's going to work on day 7 and it don't work. Or then they think it's going to work on day 8 and it don't work. And they think it's going to work on day 9 and it don't work. And so all of those gains that people made on that run up, they kept chasing that. And a lot has been given back at this point. And so all we can do is make the plan and follow it. For anybody who's been in voice chat or in pro with me, they've seen it in me. We've had a very high win rate, but we've taken 6 or 7 or 8 stop outs, whatever it is, in the last couple of weeks. You just eat it. We make the plan, and then the plan either works or it doesn't work. We'll get into trade plans later, but we know our entry, we know our exit, we know our stop out, all based on support and resistance. A few other things, of course, but all based on support and resistance. And when we enter, nothing matters between stop out and take profit. We can't panic. We can't do any of that. If the stop hits, we stop. If the take profit hits, we take profit. But that's all we can do. Support levels on Nvidia. So for me, like I said, 146, and then really this 143.50, 144 area. I'm a dip buyer at 146. If we get below it, I stop out. And then I'm a dip buyer again down here because yeah, I mean, you guys know me, I don't short Nvidia. That's a death wish. I mean, of course it works sometimes, but it's a death wish. So I always look for dips to buy if I'm going to trade it. So 146, big support. 143.50 up to 144.30. Nice little zone, slightly wider stop if you're buying that 144.30 zone. But I'm a dip buyer all the way down to here because it's support. Well, if we break that 143, that's where I might actually consider a short down to maybe 141. Chris, we'll get into that more, but my stop losses are always based on a close below the level I entered at. That's it, or if I have, on something like this, if I enter at 144.30, my stop is below 143.51. Depending on contract, that could be 15%, that could be 50%, there's really no telling. So that's why I don't use percents, because maybe your stop is 20%, and maybe it goes down to this 144. You enter at 144.30. Maybe it wicks a little below 143. You hit 20% and you get stopped out. And then the candle instantly bounces and closes above 144.30. And you stopped out because of the percent. You didn't stop out because of the chart. And us as traders, all of our decisions need to be based on what the chart tells us, not what our heart tells us, not what a feeling tells us, not what the news tells us. What does the chart say? Because the chart is the most honest thing on the planet. It will not lie. And whatever you see happening on it is the only truth, regardless of opinion. Oh God, Marvin, I would love SMCI to 10. Short on that thing. I know. I need it lower. It's done for. And that thing's just getting clobbered. Yeah. It is wild to think that you want to know it's crazy. So the very first time that you asked me about it, post split, is right here. Right around here. This is where you first asked me about it. Isn't that insane? Yeah. I mean, I think see, and look at my chart got ruined. This is supposed to be down here, but it got all messed up with the split. So these are supposed to be down here, but yeah, you'd still be up big. No, not even that thing's looking bad. Okay, well, thank you so much, everybody, for coming. I really appreciate it. If you have any questions, always feel free to DM me. Happy to have you. First class of the Trading Basics series. We got 8-10 weeks ahead of us, and hopefully by the end of it, you all will have a really good understanding of how I trade. It's nice and simple, and if anybody is willing to put in the work, it can work for you. So thank you all so much for being here. Friday morning, I'll be in Pro VC tomorrow, so can't wait to see y'all. Have a great rest of your night. Right on. Thank you. I appreciate that. Yep, we'll catch everybody later. Thank you. Have a good one.